Well, U.S. stocks, of course, taking a beating as investors assess the impacts of the tariff escalations with China. But let's talk about pockets of investing opportunities on the Chinese side. We got KraneShares Chief Investment Officer Brendan Ahern joining us now. Brendan, as we watch KWEB, your ETF, very closely, it's actually up a little bit still on the year. We've seen some standouts, the likes of Alibaba, for example. But what happens now that these huge 145% tariffs have been imposed?
Yeah, I think there's a little bit of unfortunately, we're stuck in this tit-for-tat retaliation. I think ultimately the Chinese government is taking the view that less than 3% of their GDP is represented by U.S. Trade with the United States versus 70 to 80% of the U.S. economy is dependent on consumption. So I think China's going to be much more focused on raising domestic consumption. There's a lot of talk about coming domestic consumption stimulus. That might actually come overnight. There's some rumors there. So I think China is basically saying, we're just going to focus on what we can control. And if the U.S. wants to cut off access to our products, that affects the U.S., then maybe it affects China.
Brendan, correct me if I'm wrong, because I often am, Brendan, but I feel like last time we spoke, were you in the camp that believe, listen, at the end of the day, there is going to be a grand bargain made here between Trump and Xi? Am I right about that, Brendan? Was that your position? If it is that still your position? And what do you think the outlines of such a bargain could actually look like?
Yeah, I mean, definitely we thought, President Trump is a successful business person, that this was the art of the deal, that he's expressed that he has a personal relationship with President Xi. Close advisors like Elon Musk are heavily exposed to China's economy and know China well. So we thought, there's a real recipe for a mutually beneficial deal to take place. I think other advisors in the Trump administration recommend taking a very hard stance out of the gate with these exceedingly high tariff levels, which, really, again, I think it's probably surprised the China side. But now that they know what hand has been played by the administration, I think they'll make a pivot toward domestic consumption, knowing that these tariffs really hurt the U.S. consumer potentially far more than it hurts the Chinese economy. And maybe this tactic from really, I think, promoted by certain advisors within the administration backfires on the U.S. Obviously, you've seen the reaction in the U.S. equity market. It's a very costly economics 101 lesson, with trillions of dollars of U.S. wealth lost in instigating a trade war when they could have gone about it in such a different fashion.
And so are there Chinese companies that you think are sort of better positioned while all this is going on?
Well, I mean, it's self-serving and highly biased, but, I love the companies we hold within KWEB because they're geared to the U.S.-Chinese domestic consumption story. They basically have no revenue to the United States. I would caution that, there's rumors that does the administration try to put pressure on China by talking about ADR delisting? For that reason, we've really converted the vast majority of our KWEB holdings to the Hong Kong share class, where, it's something that we did a while ago. But I think investors, it's something that we're hearing talk about, do they go after? But again, we've seen trillions of dollars of U.S. wealth hurt by this tariff policy. The U.S. ADRs are held by U.S. investors. If you delist them, you do not hurt China. You hurt U.S. investors. It's really hard to explain some of the things that we're seeing out there.
What are the actual probabilities you give that, Brendan, delisting?
I mean, hopefully it's low. The idea of delisting was because Chinese law prevented the Public Company Accounting Oversight Board from doing audit reviews. The Chinese changed their law. The PBOC and SEC have publicly stated the companies are complying. So I think this is where, if I was an Elon Musk, I'd be very worried, because this feels like a direct attack really trying to, I don't know what the thought process is of the ADR delisting. Again, you're only going to hurt U.S. investors. Let's be very clear. So it seems a nonsensical approach. But again, it's why we've moved out of the U.S. lines where we can.
Here's what, Brendan, just to get your response, here's what Kyle Bass said about on X. Here's what he posted. I would love to get your response. He said, we should have delisted Chinese stocks when the Communist Party of China refused to allow Western audits. Can you imagine how much fraud is hiding under those Chinese reported numbers? What do you say to that?
Please visit sec.gov/HFCAA, because you will read the SEC on their actual website say that the companies adhere to U.S. regulatory standards after the PBOC went to China and met with their auditors, who, by the way, are companies called PwC, Ernst & Young, Deloitte & Touche, KPMG. I mean, talk about someone you should not listen that clearly has no idea what they're talking about.
Let me ask you this, Brendan. There was an interesting piece in Barron's today. I want to get your take on this. And they were sort of gaming out what Xi's next moves could be. And they were listing things like he might finding ways to support his exporters, allowing his currency to weaken, maybe going after big American companies. What do you think? How would you rank probabilities there? What do you think his next moves are?
I mean, are they going to devalue their currency by 150%? I mean, that hurts. That hurts Chinese households. So this devaluation concern, I think, is I think China's going to say, we know what the U.S. policy is. We're going to focus on domestic consumption, which we can control. And I think we're on the precipice of significant Chinese stimulus because the perception is that 1.4 billion Chinese people are making iPhones only sold in the United States. That's just not true. You need to kind of do the math and just look at ChatGPT. Ask ChatGPT, how much of China's GDP is dependent upon U.S. trade. It's less than 3%, less than 3%. So if you can raise domestic consumption, you can more than offset that weakness. And again, I think this really, really hurts the U.S. consumer. I think you're really going to see already a contraction in U.S. consumer confidence. It's really going to play on the consumer here, which represents a disproportionate percentage of the GDP. It's kind of scary if you start to really think about it. I really hope cooler heads prevail.
I could ask ChatGPT, but I would always rather prefer to have you, Brendan, on the show. Thank you so much for joining us.
Feelings mutual.
Appreciate it. Thank you, sir.